In this video, we're going to cover exactly what's going on in the Milwaukee metro housing market, backed by stats, and answer the question, is now a good time to buy, sell, should we just wait? Everyone's thinking that right now, especially with interest rates increasing towards the end of 2022, what's going to be happening next year, and we're going to share that all right now. My name is Jacob Sheets, your Wisconsin realtor and team leader for the Jacob Sheets real estate team, brokered by eXp Realty. And on this channel, we like to give practical tips for buyers and sellers in the Wisconsin market, educate and grow our team of realtors through eXp Realty and the Wolfpack, and highlight the awesome community that is Wisconsin. So if you don't want to miss any of the future videos to help you out going forward, make sure to subscribe and ring our notification doorbell below. So with that, let's dive into it. So the two things you actually need to know on the big macro level of what's going on is supply and demand. Keep it super simple. And then you can make a decision for yourself what's actually happening and what's good for you. Is the inventory up or down? Or is the amount of people looking for the houses and actually moving forward with it, is that also up or down? Those are the only things that really matter. Okay? So if you put those two together, you can make an informed decision. So let's take a look and keep that in mind as we go through all of this information. Is how would more houses compared to mine affect my listing? Or how would less people in the market, maybe because of interest rates, affect my position as a buyer? Okay, so this is a graph from last year October versus this year October, and then we can make assumptions going forward here into November. So the active listings, last year we had 3,743. Now we only have 2,891. So down 22%. What does that mean? Supply is down. So there's actually less on the market than there was last year. Sold listings last year were at 1,861, and then this year is 1,304. So sold listings are also down 29.9%. So the solds going off the market is going down. That means the inventory, is going back up a little bit from the sold perspective, but is down drastically from the active listings. Basically, what does that mean to you? There is less inventory on the market now than there was last year. Median price per square foot, this is really astonishing. So it's actually gone up from 164 per square foot to 181. People that are thinking, oh, the housing market is crashing right now. Well, Milwaukee area, take a look. The stats doesn't say that. So months of supply, we are up a little bit from 2 months to 2.2 months. As a reminder, months of supply is how fast is the inventory actually moving right now. So this is saying that if no new houses came on the market, we would have enough homes to satisfy everyone's demand out there for a little over 2 months. A balanced market is, again, 6 months worth of inventory. So we're still in an aggressive seller's market that's out there, backed by stats. Things are kind of changing where demand is cooling a little bit, which we'll share later. But in general, you can still be strong as a seller and say that I still have leverage of saying, if we don't have a huge increase of months of supply or how long houses are to sit on the market, which leads us to median days on market. How long are they actually sitting? Almost exactly the same as last year on average. So 21 days is now up to 22 days. It's negligible, right? So it's basically the same. Okay, now let's take a look at the Metro MLS statistics for the Milwaukee metro and surrounding area. These ones are my favorite because I'm very visual, and compared to the bubble graph of last year, you just see a snapshot of last year versus this year's, 1 month at a time. You see everything going all the way back. We scroll down here to 2015. So that's a lot of data to make a good decision on. So let's take a look at the new listings here in October. We have this little dot right here. This is saying, we're at about the 1,600-ish range of the new listings that are on market. So with around that 1,600 of new listings, this is not how much is sitting on the market, but how much is new coming on the market by month. It's totally different for what's actually sitting there, right? So here's around 1,600, and when we go back, here would be January, December, November, October. We can see we're down a little bit, but let's look at the trends, right? So new listings that are coming live on market, it's been crazy predictable every single year what is exactly going on. Boom, COVID happened, people freak out, so it gets a little bit lower here. But it's been completely consistent for active coming to the market. So the thing that why I'm stopping here is if we saw an abnormal uptick, whether it be because of foreclosures or anything like that, it would show that we have more inventory coming to the market, not necessarily sitting on, but coming to the market, saying that, hey, things are about to change and it's going to be a lot harder because you have so much more new competition, you sellers out there, to sell your house. It's pretty stable, compared to what's going on in the past. Now, let's take a look down at pending sales. So things that are under contract going towards closings. We have here going up and down, up and down. It's kind of going downward because of the lower amount of inventory and options here in the pandemic time, going much lower. And then going back here to stable, consistent patterns. So I don't have too much to add here for pending sales. And then as far as closed sales, we see the almost exact same thing going up and down. This is very similar to the actives that are here. It's following a normal trend. I'm not seeing anything that's out of the ordinary. Now, when we go to days on market, let's take a peek here. This one's very interesting. So we see a normal trend, but it's been going down and down all the way since 2015, when the average was, 90 days on market. Imagine listing your house and thinking, what a different life, right? We expect there to be multiple offers in the past couple of years. Day one. What if you had to sit there for 3 months and actively market it every single day? And that's just the average. So that's like, you're hoping for that, for the best. Now we're down here to the average 20 days on market until we're getting under contract here. And it's going back up a little bit, but let's see what happens in October in the past years, January, November, December, November, and then October. It was starting to go back up a little bit here in the past few months. It's doing almost the exact same thing it has for the large majority of each one of these trends for the year. So we're not seeing anything out of the ordinary for days on market. Now, median sales price. And these are kind of going to go hand in hand, but average sales price and median sales price, I like to use on median a little bit more. And we can see here the trends that are going up and down. The parts that I like to see is that we see a large increase in the first quarter. The second quarter, we either see it level off or still slightly increase. Third quarter, usually a level to towards the end going down. And fourth quarter, almost always going downward. So we can kind of see it here. Big up, somewhat decent up, but still stable, kind of going downward, and a downward trend for fourth quarter. Same thing, big up, semi-decent up, leveling off to going down, big up, still going up a little bit more, and leveling, going down. So we can see that same trend going here. What's interesting is during this 2020 time, we can see with the sales price, usually we'd have what? Big up, followed by leveling, and then going down. But this one, it got a double dose. It had a big up here, median sales price, followed by another big up, just as big if not more. A decline, but if we're looking at the actual trend, kind of leveling. Third quarter and fourth quarter, we just kind of skipped going down and leveling, right? And then we did the same thing next year in 2021, big up, another big up instead of leveling, flattening out a little, kind of going down. And then our fourth quarter here in 2022, we saw a decent decrease, which if we look at the stats, normal. But it's a little bit bigger than usual because we were so inflated, right? Not to the point of being artificially crazy inflated. Someone could fight me in the comments below if you'd like. But then if we go into this next year in 2022, wow, look at this. I mean, the beginning of the year, we had an even bigger spike than either of the main COVID years coming in, which is something that is hard to believe, but it's there. It's the stats. Median sales price going up, and then again a second quarter two, massively still going upwards. Quarter three, we're kind of leveling up, going down. Quarter four, we're going in a downwards trend. It's a pretty steep downwards trend just looking at this 1 month difference. So I'm curious to see when the November stats come out, like what actually continues to go downward here, or if it levels out. However, we can expect it to still continue to go downward. So these are the median sales price of the properties that are out there, meaning the houses are probably selling for a little bit less, but also with less houses on the market, it's going to skew that data a little bit downwards as well. Okay, this one's awesome. This is percent list to sale price ratio, right? If you list your house for $100,000 and it sells for $90,000, you had a 90% list to sale price. If you sold it for $110,000, you have a 110% list to sale price ratio. So we've seen here the average actually getting everyone pretty much on average getting what they want didn't start being a norm until in the pandemic here, the average sale price of 100% midway through 2020, and then 2021 and 22, we're just living in this like gravy train year of just, for anyone that's a seller, of like, man, like, well, duh, I listed the house. Of course it should go for 104% of the list price. And we have our trends are going normal, but these past couple of years here, they've just been massively increased and expanded. Now, we see no abnormal up and downwards trend here, but we're still kind of floating around this 100%. So we still have these last 2 years for comparison, November, December, into January, November, December, January. These were all downward months. 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 So we can expect that in the next couple of months going towards the end of the year, you could probably see, if you're going to list your house right away, you're probably going to get below asking price offers. And if you end up going at the beginning of the year here, we start to see it start to trend back upward almost immediately. January 1st, boom, starts to trend upwards every single year without fail. Every single year it has trended upwards. So if that's your goals, kind of market accordingly when you go and list on the market. Expect that if you wait a little bit longer, you might be able to get over your asking price. So now we have up here, this is the 100% mark, right? No, it's 90. Here's the 100% mark. And we're at slightly below that here, in the 99% range, still pretty darn close. And what I anticipate is that it continues to go down slightly and then follows a similar trend. I don't think it's going to be this large of a bump like it has been in these past 2 years. I'm estimating it's not going to crash downward, but I do think it's going to be somewhat similar to one of these curves, kind of like this 2020 to 2021. Why? Because of the interest rates that are, pushing us back up, less competition in the market. People are more scared. People that don't educate themselves just freeze up and then they go, I'm just going to rent for a year, or I'm just going to do whatever. They don't make it backed on stats, and they just make that decision. So that's what I think is going to happen. It's going to look a lot like this year. There's too many other indicators that there's not enough inventory to make a huge crash in the market for your value of your home, or for a buyer to just like, I'm going to hold on tight for a whole year or 2 years. I don't think that's necessarily the wisest decision if it's just to get in and time the market. I think you'd really be gambling for that unless we have a huge surge in inventory, because that would increase our supply. And our demand is decreasing slightly now, so you can keep that in mind. Inventory of homes. This is, again, it's been, if you take an average line, it just goes straight down here. When we look at this trend, January, December, November, October here, we can expect downwards results if it's anything like previous years. It's almost all downward for inventory. So basically what is it saying? It's Wisconsin. It's snowing. People don't want to list their house when it's snowing unless they have to. So we can expect that to go downward. It is following a pretty similar trend, and we will see what happens in the next couple of months. Okay, months of supply. This is fantastic. Like I said earlier, 6 months of supply right here. This is going to be your quote-unquote balanced market from economists, and we haven't been past that 6-month range in about 2016. That's a long time to be in a seller's market where they have the main leverage. People are freaking the freak out, and we're going, oh my gosh, everything is changing. It's gone to a buyer's market. Everything, sellers, panic. I don't know. You tell me. Do you want to panic about this? This is 2 months worth of inventory. We just crept over 2 months of supply. So basically, if you want to be, a seller in this scenario, and people are fear tacting you to get on the market quickly, or your friends are like, and family or other people that don't have stats are like, oh man, you got to be careful and you got to, look out for this huge crash. Just know that in order for us to really have the buyers have true full leverage of a buyer's market, it's got to be over 6 months worth of inventory. We'll start to feel a little bit of a shift if it goes up here, and we're not used to going up past this 3-4 months of inventory. So we'll keep an eye on that in future months. But getting up over this is gonna be a lot of work to get over 6 months worth of inventory. So we will see. In short, you sellers, you don't need to panic because you still have leverage. Okay, take a deep breath. You got this. Buyers, what this means for you. there's still not a lot of options for you out there. So if you're going to just wait until it gets over to the 6-month timeline, you're going to be waiting a really, 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 really long time. So you're probably going to want to make a decision, an educated one, and instead of going way over asking price on something, you're going to have less competition that's out there because there's higher interest rates, but be able to get that below your potential asking price if it's in the statistics that we had up here, right, of being able to have below asking offers. That's very common for right now. Go in strong with that, and guess what? You can always refinance in the matter of 6 months or so, and I even have a lender partner as well. You can reach out to the comments below if you want to get connected with him, and he is actually doing a program right now of saying if you buy in the next 6 months or so, you can refinance within the next 15 months, or there's 12 or 15 months, with no loan origination fees. So being able to say, guys, clearly backed by the stats, you're fine, but if the one thing that's holding you back is just interest rates, that's okay, and you still need to move. Make a move, feel comfortable and confident, and jump in with the refinance later for free. Okay, so that summarizes just about everything you need to know for the current housing market in Milwaukee metro surrounding areas. If you want to work with me directly and my team, go ahead and reach out below, and I have a calendar link to get put onto one of our appointments right away, and we'll get you connected into the area. I have a relocation guide as well. You can ask for that in the comments, and I will send you over a link to a relocation guide. And if you just want to reach out to me and the team as well and see how we operate, because it's different than a lot of other people in the Wisconsin market, just go ahead and reach out below. I have my phone number, I have my work email, so you can actually get connected with me and the team, and we can take care of you guys for all your real estate needs and make a good connection. Thank you so much for watching. Make sure if you liked it, like the video, subscribe, and we'll see you next time.